Welcome back to the channel, and thank you for joining me. I'm Algabot, and this is where we break down automated trading strategies for MetaTrader 5, one piece of logic at a time. Today we're studying an expert advisor called Bar Conviction Trend Writer. It's a trend-following, momentum continuation strategy, and its central idea is elegantly simple. It reads where each candle closes inside its own range to measure conviction, using a classic calculation called the close location value. Over the next few minutes, you'll learn exactly how it thinks, how it enters, and how it manages risk. Let's get into it. So what exactly is Bar Conviction Trend Writer, and who might study it? At its heart, this is a trend-following, momentum continuation expert advisor. Rather than trying to predict tops and bottoms, it aims to join a move that's already underway, but only at the moment participants show fresh, decisive conviction in that direction. The engine behind it is the close location value, often shortened to CLV. For any candle, it measures where the close landed inside the bar's high-to-low range. If a candle closes right at its high, the value sits near +1. If it closes at its low, near -1. And a close in the middle sits near 0. In plain terms, it's a clean, objective read of who finished the bar in control, buyers or sellers. The strategy smooths that reading over several bars to get a running measure of conviction, and it combines it with a slow trend filter, a volume check, and a volatility measure. It reads a single time frame, and it's designed to be time frame agnostic. A natural place to study it would be a trending foreign exchange major or a metal, such as the euro, dollar, or gold, on something like the 30-minute or 1-hour chart, though it can be applied to whatever time frame you backtest. What type of trader is this suited for from an educational standpoint? It's for someone interested in systematic, rules-based trend following, who prefers joining established moves over catching reversals, and who wants every decision defined by objective conditions rather than discretion. Everything here, entries, exits, and risk, is scaled by volatility using the average true range, so the same rules adapt across symbols and time frames. One more thing to appreciate. The strategy is deliberately non-repainting. It only ever uses fully closed bars, so a signal you see in a backtest is a signal that genuinely existed at that moment. Keep in mind, of course, that all trading carries risk, and losses are a normal part of any strategy. This video is educational information only, not financial advice. Let's walk through the exact logic, step by step. First, an important detail about timing. The strategy only evaluates signals when a bar fully closes. Nothing is judged on a half-formed candle, which means a signal can never repaint or change after the fact. Every decision is made on completed information. When a new bar closes, the strategy checks a stack of 5 conditions, and every one of them must agree before it will consider a trade. Think of it as a layered filter designed to screen out weak or random moves. The first condition is regime. The strategy measures price against a slow trend EMA, by default the 50-period exponential moving average. For a long, price must be above that line. For a short, below it. This keeps the strategy aligned with the prevailing direction rather than fighting it. The second condition is conviction. Here the strategy uses the close location value of recent bars, smoothed over a short window, 5 bars by default. If that smooth reading is above +0.30, buyers have been consistently closing bars near their highs. Below -0.30, sellers have been closing bars near their lows. The third condition is ignition. The just closed signal bar must agree on its own. For a long, it needs a positive close location value and a close above the previous bar's close. This confirms the momentum is happening right now, not something stale from several bars ago. The fourth condition is volume. The signal bar's tick volume must exceed its own moving average, by default over 20 bars. This is the participation check. The strategy wants real activity behind the move, not a thin, drifting market. The fifth condition is volatility. The average true range must be positive so that stops and targets can be defined sensibly. When all 5 align, and only if no position is already open for this strategy, it enters. A long buys at the ask, a short sells at the bid. The stop loss is placed at 1.5 times ATR away from entry, and the take profit at 2.5 times ATR, giving a fixed reward-to-risk shape set by those 2 multiples. From there, a trailing stop takes over. On every tick, once price moves in favor, The stop ratchets to 1.5 times ATR behind price and only ever tightens, never loosening. That lets a winning move continue while steadily protecting the open gain. The strategy holds just one position at a time and never adds to a losing trade. Let's read the actual MetaTrader 5 code on screen, just as it appears in MetaEditor. At the top are the inputs, the settings you can adjust. TrendEmaPeriod is the slow trend filter, defaulting to 50. Conviction period, defaulting to 5, is how many bars the close location value is smoothed over. Conviction threshold, at 0.30, is how decisive that smooth reading must be. Volume period sets the participation filter at 20 bars, and ATR period is 14. Then come the 3 ATR multiples, 1.5 for the stop, 2.5 for the target, and 1.5 for the trailing distance. Finally, the fixed lot size and the magic number that tags this strategy's trades. Now look at the long block. The Boolean long signal is true only when 4 things hold together. The signal close is above the trend EMA. Conviction is greater than or equal to the threshold. The bar zone close location value is positive, and its close is above the previous close, and volume is confirmed. When that's true and no position is open, the code reads the ask price, sets the stop at entry minus the ATR stop multiple times ATR, sets the take profit at entry plus the target multiple times ATR, and calls trade.buy. The short block is the exact mirror. Conviction must be at or below the negative threshold, the close below the EMA, the bar's close location value negative and below the prior close, and volume confirmed. Then it reads the bid, places the stop above entry, the take profit below, and calls trade.sell. Same structure, opposite direction. Let's bring the strategy to life on a chart. What you're looking at is an illustrative sequence on a currency pair with 2 tools drawn for us. Riding through the price is the slow trend EMA, the 50-period line that defines which direction the strategy is willing to trade. And below the candles sits a subpanel showing our conviction reading, the smooth close location value. It swings between -1 and +1, and we've marked 2 important levels on it, a bullish line at positive 0.30 and a bearish line at negative 0.30. The strategy only pays attention when conviction pushes beyond one of those lines. Watch the opening candles. Price is drifting sideways, hugging the trend EMA, and down in the panel our conviction reading is wobbling around the middle, unable to commit to either side. There's no agreement here, so the strategy simply waits. Patience is built into its design. Now the character changes. Price lifts and closes above the trend EMA, so the bullish regime condition is satisfied. Look at the marked by candle. It's a strong bar that closes right up near its high, which means its individual close location value is strongly positive. That same bar also closes above the previous bar's close, giving us the fresh ignition the strategy demands. In the panel, the smooth conviction line climbs and crosses above the bullish 0.30 level. And this bar's volume is above its moving average, confirming real participation. Regime, conviction, ignition, and volume all agree at once, and the buy entry marker prints. The moment that position opens, the strategy sets a stop below entry at 1.5 times ATR and a take profit above at 2.5 times ATR. That's the built-in reward to risk shape, a target that's larger than the risk by the ratio of those 2 multiples. Follow the next few candles. Each one closes higher, buyers stay in control, and as price advances the trailing stop ratchets upward behind it, never loosening, locking in more of the open gain. Price then reaches the take profit target, and the long trade closes in profit for this illustration. Notice what happens next. Momentum stalls. A candle closes lower, then another, and price rolls back down through the trend EMA. Our conviction reading in the panel rolls over with it, falling from positive territory down toward the bearish line. The strategy now has no open position, exactly as designed, because it allows only one at a time. Then the mirror image sets up. Look at the marked sell candle. Price is now below the trend EMA, so the bearish regime is in force. This bar closes down near its low, giving it a strongly negative close location value, and it closes below the prior bar's close, fresh downside ignition. In the panel, the smooth conviction line drops through the negative 0.30 level. Volume on this bar is again above its average. All the same conditions line up on the short side, and the sell entry marker prints. For the short, the arithmetic flips. The stop sits above entry at 1.5 times ATR, and the take profit sits below at 2.5 times ATR. Watch price slide lower, candle after candle closing near its lows, while the trailing stop ratchets downward to protect the position. Price works its way down to the take profit target, and the short trade closes for this example. Step back and see the pattern. In both trades, the strategy did the same four things. It checked the trend regime. It waited for smooth conviction to cross beyond its threshold. It demanded a fresh, higher or lower close on the signal bar, and it required above-average volume. Only when everything agreed did it act, and in both directions it managed the trade with the same volatility-scaled stop, target, and trailing logic. And that's a full walkthrough of bar conviction TrendRider. We covered its core idea, using the close location value to measure bar-by-bar conviction, its five-part confluence filter of regime, conviction, ignition, volume, and volatility, its ATR-scaled stop, target, and trailing stop, and we watched both a long and a short example play out on the chart. Remember, everything here is educational information only and not financial advice, not a recommendation, and not a solicitation to trade. Every strategy carries risk, and losses are part of the process. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like analyzed next, and subscribe so you don't miss what's coming. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.